definitely about. Good morning, everybody. This is Dennis Wilburn with the Active Trend Traders, joining us from Zurich, right?
Yeah,
Hey, is Michael Bishop. Um, are you enjoying winter weather over there?
not at all. So there is no winter weather
What's that?
so far. No, really, we had very green Christmas
Wow.
almost everywhere. Also in the mountains. Now it turned a little bit into rain, and really up there, there will now there's now a little bit of snow, and next week weather forecast is heavy snow. So maybe winter starts, but
Ah.
currently.
Well, El Nino is
It's
hitting.
exceptional.
Yeah,
Yeah.
El Nino is hitting here in California, and actually a buddy of mine who works up in the snow in the ski. Oh, the ski season up in Tahoe. They've been getting a lot of snow up there, so really cool stuff. But we're not here to talk about snow and or winter yet, because we've got other exciting things to talk about, such as where the heck is this market going? I want to remind everybody that got that message out for Mike. Let's see if Mike is in Dallas, and he's resequencing himself for the new year. So all materials that we present here are for training purposes only, and traders should always paper trade any new method prior to the risk of their own personal capital. Those of you who do follow the active trend trading system, I feel really good that, to be sitting on the sideline watching the market go by, not watching it go by, but watching it as it falls apart, and not in a hurry to get into any specific trade, because we've had setups have been few and far between with the active trend trading. Here's Michael's disclaimer. Basically goes into his disclaimer that's required for the European work that he does. And so at the Active Trend Traders, I really put a high premium on teaching. I love to teach. I love to provide opportunities of learning. And so we focus a lot on that, so that because I like to see folks be able to become, the master traders, if you will. And so partly in doing that, um, we've moved to Tuesday night now, but midweek, every week, we offer a training session for the premium active trend traders. This week, we're going to be talking about the effects of compounding and how to both benefit from them, and also to recognize how we can work towards accelerating the effects of compounding. What are some of the variables with compounding that allow us that if we uh, can alter those variables, how can it affect our compounding over time? So Michael, it's been a crazy week. It actually started with the failed Santa Claus rally. And as you can see, we did a Saturday webinar on 11/26 and holiday trading with the upward bias. My big question was the Santa Claus rally beginning? We're going to have, rate hike residual issues. We're going to be window dressing for the end of the year. The last 2 days of the year turned out to be really crummy days for the market. And so I think from a Santa Claus rally perspective, it turned out to be more like Santa Claus left some coal in the stocking. Um, then we woke up this week, um, over the weekend. All the bad news starts coming out of, let's see, out of China. They start rapidly devaluating the yuan. Then the Saudis defriended the Iranians, which that became an issue. And then overnight, a couple of days ago, the North Koreans had test fired a nuclear weapon, and then the Chinese devalued again, and we just see and also the stock market, the Shanghai index halted trading And so we've seen this just, I mean, probably what could be considered the best first week sell-off of all time, one of them at least. And we are now have approached and gotten down to extremely oversold conditions. Now, it doesn't mean we can't go to even, more extremely oversold conditions, but right now we're looking for a place where a market can put in some kind of a relief rally. What I'm seeing here is that, S&P has found support, but will it hold relief rally to be the relief rally then leading to more downside? NASDAQ at strong support, but again, it's working within a very wide trading range, and it's a tradable trading range if you're trading the index ETFs and or the leverage index ETFs. And the Russell approaching, the Russell is approaching support that we last saw back when it did a rebound off that low in October of 2014. So and of course we know the Russell is the one entity that in fact is a non-weighted index, and also more impacted by the increase, even the slight increases in interest rates. So my question, here's where I'm leaving the week, Michael, is the global chickens appear to be coming home to roost. Regarding the Fed's proving themselves rate hike last month, it's kind of a big oops, or it could be just a really brilliant move because it put a bullet back in their in their pistol of what they could do. It gave them another tool to be able to take into consideration or utilize that they were basically out of ammunition, but now at least they have that one thing. They can reduce rates again. So the big question globally, and what are you seeing overseas, in Europe? Where's the safe haven?
Good question. No, that's just 5 minutes ago checked some data from Switzerland, and usually Swiss franc goes up in such situation.
Yeah.
In the last 5 days, it did not at all. It was very calm. Gold, yeah, maybe.
Well, gold bumped up a little bit.
Yeah, so it could find a button.
Yeah,
I would say all these metals.
And but I think something like oil.
I think what's good now that there are really a couple of markets scratching on their, you could also almost say, historical lows.
Yeah.
For instance, I think Brazil could easily pop up 20% or so as soon as there is the first not really bad news coming out from there, or also maybe the Hong Kong market.
And so I mean Hong Kong,
Southern Europe is hammered.
So like I said, where's the safe haven? But the thing that we can take heart in is that resets are good for the market, but they're sometimes can be very painful to go through. And unless you're standing on the sideline, again, letting everything fall and then waiting for the opportune time to go, to get into particular trades. We tried to get into a trade on TSO today because it was a good setup. Launched the trade. The trade may not work, but it was a test balloon type of trade. I went in with Michael. I went in with a quarter size position, and so the lesson there is when the little test balloons that just send up when the market has been coming down and looking for a bottom and things look like their stock is holding up better than the rest of the market, is adjust your expectations and adjust the way, the mechanism by which you go ahead and get into a stock. And in this case, I went in with a quarter position, a quarter, that's it. And so even if it totally goes against me, I will, and totally doesn't work and I get stopped out, the stop out for on a quarter position will be quite small. So I'm good with that. So now, Michael, let's see. Let me get over here. Yeah, let me cover this really quick. This is what percentage of stocks above the 20-day moving average on the NYSE looked like prior to the just after going into the Christmas holiday. Here's what it looks like today. And from I'm liking it for several reasons, because historically, when it starts getting down into these areas, now it can stay down in this below 30, below 20 level, and can go even below 5 if we go into a severe correction that some would say, hey, we are now in a bear market. It can get down there and linger around for several weeks, several days. But we know that once things get down in there, that prices, we are getting closer to a market low where we would expect a pivot point to come back up. And we'll be looking at the charts here shortly, and we'll take a look at where some of those support levels could be. But a lot of weakness. We'd actually got in and traded some of this latter December time frame, because this is one of the triggers we use, one of the non-proprietary triggers we use with the early warning alert system. And this prepped us to potentially get into a trade. We had another trigger day before yesterday that triggers that, stand by to get into a trade. But as you see, occasionally it falls out the bottom side. And so, but there are some silver lining on, around the clouds, in that we're getting some positive divergence on some of the charts. Sitting there. So let's see now, Michael. Okay, so the path of least resistance. The path is something that we should always take a look at. Clearly, the path of least resistance for at least, yeah, Joe, that was for the NYSE, that last chart. And that's a little indicator that Mike Traeger and I use, that gives us a pretty good heads up for some, really oversold and occasionally overbought conditions. It's percentage of stocks above the 20-day moving average. The path of least resistance, at least right now, clearly it is probably down. But that may be, it may take a small hiatus and go into some kind of a relief rally. And that relief rally could wind up with a 3, 4, 5% bounce in the individual indexes, but still not put us even close to going back into an uptrend. So Michael, before I switch over to, because I think the next chart is, I'll be talking about the individual markets. You have something on the robo trading, right?
Yeah, I mean, that was promised since a while.
Okay.
And,
now I am making you.
That's great. We are doing this the first time.
Yeah, it's the first time we're doing
this.
this.
I see screen clean background. I think that's fine.
And then you just need, there you go. I can see your.
Does this work, or should I make it bigger?
Okay, if you can actually just go to a slideshow, or if you want to, or you can just talk specifically just from there.
Okay.
That's good. Yeah, that works.
Okay. But not for me. No, that's fine now. Okay. Well, I start with one tool. I think that's could also be an interesting one for all of you. I think from the background, this Meet Invest was invented by a guy, or set up by a guy who comes from the investment banking, and he uses this tool for his own investment. Plus offers this since a year or so for the public. And
hey, Michael.
yeah.
Just how about just to really give a real quick overview on what we're talking about with the robo-advising for the members, for the folks who this is one of their first times joining the webinar.
Well, actually, last year I wanted to make myself familiar with this robo-advising or fintech offers, and I picked up three tools, and I'm happy to share a little bit my experiences, what worked, what did not work so well, and you will see that all three of them have different target groups, or they are fulfilling different tasks. And yeah, I think it's interesting to give you a short overview. The meet at Invest, I just go quickly into this one, and you will see it's very professionally designed. Usability is really good. You set up an account. It's for free, and it's not attached to an online broker or any. It does not trading. All it so you basically say which strategy you want to run. And let's say we want the tool to find kind of a US momentum strategy. Then, and I want, I think this guy. I think that we market leaders growth. I think that's also and these are typically companies that Active Trend Trader targets to. And then I say I want to get, so first, so then I say I want to have North America and in the United States. So it will generate a list now if I follow the strategy of James O'Shaughnessy, and he has written a really big book, What Works on Wall Street, with a very, he tested a lot of various mechanical strategies, like what happens if you consistently invest in this 10% of companies with the most growth, or what happens if you invest successively in the companies with the lowest PE ratio, and things that like. And so I pick up this United States, and then it will generate a list, and it will daily verify if there are new companies that fits into this basket, and if there are companies that are eliminated from this basket. And you can say if you want to get notified daily, weekly, or monthly, let's say daily, okay. And then I say create stock list. And then we end up with maybe 15 companies like that, all US companies. They're pretty small, market cap 1 billion around, and you see it's pretty active. So we have, for instance, there 2 companies that just came in today. There is only a very few companies that stayed in this basket for more than 100 days. And what you can say then, how much you want to invest. Let's say it's 100,000, and then you can say if you want the basket to be equally weighted, or I say I don't want any stock to be more than 10%. And then you see quick history in and out. And I mean, that makes sense. So the market turned into negative territory. So there were more companies going out than going in. We can see what you have done in the last week. You see even the month. Well, basically, I think it's screwed it up now. But at the end, you say, as for the start, download the table, and then you get a list with the ticker symbols, and then you can upload and tear. So it's really kind of.
Looks like there's a lot of not of manual moving things around there.
Yeah, I mean, little bit. Yeah, I mean, you need the ticker, and
yeah. My big question on this, Michael, of course, I trade the active trend trading system that is basically focuses on investor business daily IBD 50 growth stocks for my environment, for my pool of stocks that I'm choosing from. I guess what would compel somebody to want to utilize a system like this that, to me at least, looks a bit complex?
Yeah, and I totally agree, and that's also so my rating. I mean, usability technology. I think it's from a technical point of view, it's really good. Then from the investment in universe, I did quite a lot of tests, and for US, I think the coverage is really good.
Okay.
For the international markets, I really have my question marks. I mean, even in professional tools, the data comes from Bloomberg, it says, but also in professional tools, I couldn't find some of the stocks, or some of the stocks were just not tradable. And the fundamental data they use, especially where I am a little bit familiar, that's Switzerland and the European market. For instance, there were only, I think, 1 or 2 stocks that have been value stocks meeting the criterions, and that can't be true. I mean, if you do stock picking in the European market, you find some good value stocks.
Okay. So.
Yeah, and I think as soon as you have some doubts about the underlying quality of the data, then it gets a little bit messy, or at least then I lose my confidence.
So, okay, so let's see. Yeah, so
support was really good. Costs, I mean, it's free, especially at least for now.
Yeah.
And I think performance in the US market, if you play a little bit around with the parameters and maybe concentrate on the major stocks, on the bigger stocks, then I'd say your performance should be all right. I mean, I think all this strategy depend. I have some limitations and depend also where we are in the investment cycle. I mean,
Right.
in a long bull market, I think these strategies work really well,
Yeah.
and
Yeah.
you overachieve the market. As soon as we turn into a bear market, or in a volatile market, then I just read a study about this. Then the correlation of different stocks gets closer and closer,
Yeah.
and yeah, then I think the only way is active investing to avoid such
Yeah.
down
And
cycles.
that's that's the anyway, that's interesting. And so next week you just provide us another update on another one of the company, the companies that are providing the robo advising on what you found good about them or bad about them. One of the things, just for next time, when you say performance is good, it would be nice to know what kind of percentage, what is the
Yeah,
percentage of point on that, and then also on this. Does that performance reflect the performance if a person owned, let's say the system recommends that you own 50 stocks. Is that performance based on owning 50 stocks or that kind of stuff? Those are some of the questions I come up with, because I know that owning 50 stocks is a very inefficient way to take advantage of the effects of compounding, simply because it is a bugger to manage. I mean, for most folks, and for me, I mean, I don't want to manage more than 6 or 7 different open stocks at any one time. You know, you know what I'm saying?
yeah, I think, or anyway, I think as soon as you go for such a tool, you either follow the instructions and don't bother
Okay.
about individual management, or you go your own way.
Yeah, and one of the members also says, you know, questions about the fundamental soundness of the particular stocks, and some of them look like they were very lightly traded, and others are the type of stock, value or growth. Picking depends on the screen chosen. So, okay,
Yeah,
Michael, is that
I
it?
said, I mean, you can, everybody, if you can play around with this, it's free, and I didn't get any advertisement in the last year, so I think it's really
Okay. And right down in there in the lower right-hand corner, folks, is Michael's email if you want to chat with him about the concept of robo-advising. Sound good, Mike?
cool. That's it.
Okay.
Uh,
And
do I
thanks.
have to do
Thanks for,
something?
huh?
Or
You have to do nothing.
okay, great. We're back.
Okay. Are we back on the slide that says the path of least resistance? Yeah, one of the questions, one of the persons also asked up. Okay, great. Judy asked a question: are any of that robo advisor website, are any of them following like the IBD CAN-SLIM methodology? And so I don't know.
Me too.
So, okay, here is, let's get back to for our market review, and then we'll take a look at some stock charts. Here's where we sit as of 9 o'clock this morning. Year to date. um, and I'm only laughing because, like I said, this is one of the most significant, first week sell-offs that we've ever seen in the market. So it's kind of interesting. And I'm also, as the markets have become more globalized, much more globalized than they were 20 years ago, how the impacts of things going on in places like, what's going on in China, what's going on with the global tensions from terrorists, from North Korea, this type of thing, how that comes into impact the market. Here's where we finished everything up at the end of 2015. The markets were down, except for the NASDAQ. Now, going from into 2016, the Dow's down almost 5%. The S&P is down almost 5%. The NASDAQ is down more than 5.6%, and the Russell is down 6.66%. I hope that is not a bad omen for the Russell. Some of you may get that little joke there. But it's very interesting. Right now, with the exception of the active trend trading system, we were flat the market until early this morning where we got into a small position in TSO, which may or may not work. And if it doesn't work, we will fire TSO. But as of this time, basically sitting at zero, any type of return in the active trend trading for, so by doing nothing, we're already outperforming the S&P, the NASDAQ, and the Russell. So sometimes you always remember, cash is a viable position, and holding, being in cash is also a strategy. So let's take a look at the markets themselves to see how they've changed over the last little bit. Okay, let's look at the S&P. In one of my market updates this week, I had drawn a line from here to here also, because it looked like that the S&P was starting to work within this downtrending trading range. And then on Wednesday, it got down towards the bottom of that, expecting a potential bounce back up, back into this area. But instead, on Thursday, what we got further huge sell-off that took us, not only out of that trading range, but dropped us down past this longer-term uptrend line. And now we have closed below that and are currently living or sitting right below this. The candlestick on a weekly chart that we're seeing right now at the S&P is a spinning top doji type of candle, which is telling us that the market is ready to rest right here and potentially rebound from here, because we know that things are getting more and more oversold. Whenever the true strength indicator on a daily basis gets down around or slightly, towards the negative 50 level, there tends to be a little bit of a bounce. But we've seen a negative divergence on the weekly coming across here as we've been trying to make new highs. The true strength indicator has not even been attempting to make new highs, and we have dropped down on the daily momentum back below the zero line also. So we have a very specific, we're in a lower resistance, a lower support zone that starts up here at about 1950, runs down here to about 1850, so 100 points. The true strength indicator is looking weak, and this week we see that the momentum indicator has also dropped below the zero line, meaning that we are probably going into more downtrend over the next few weeks. And where might it turn around? Basically anywhere in that range right there. We may get a bounce. We may get a bounce from where it's at, back up. Where would be a likely place for it to go? And please pay attention to this. Is a likely place for it to go would be right back up here to around the low of this week right here, which was the 14th of December. And a move back up that far would be a move of about 2.5%. So if you're trading in the index, the leverage index ETFs, 2.5% would equate to approximately a 7 to 8% gain during those time frames. When we move into this kind of market where it looks like this larger rounded top that we have been talking about also for some time now is looking like it's fulfilling to the downside, we'll keep our eye on this, because there will be tradable opportunities within it, but they'll be short-lived. In other words, you'll get a 3, 4, 5% pop, and so we adjust our expectations so that if we are going to trade it to the upside, we'll take we will expect and look to take a smaller bite of the apple and provide tight stops to the downside. So that's what's going on with the S&P. The NASDAQ. Okay, I like the NASDAQ on a daily basis, because if we finish right where we are right now, this would be considered a bullish harami. Bullish harami, and that's the small body inside a larger body from the previous day. Bullish haramis tend to be very effective reversal signals for those from candlestick mechanics. Where might this go? Well, either back up to the 8, or just look where that past level of strong resistance or support was, which is about the 44.77 level, and up to the 44.77 level would be about a 3% pop on the NASDAQ itself. So we now are getting some confirmation of a stronger support area, and so we'll keep our eye on NDX for potential trade in either TQQ or just the Qs themselves. Excuse me. And what are we looking at with on a weekly chart? Again, we're seeing this, this weakening process take place on the true strength indicator, the momentum, and so since these are internal momentum measurements and oscillators, right now the direction they're heading is down, and they're breaching, at least the TSI is breaching the 0 line, which tends to mean, hey, in a longer term chart, we're going into a more significant pullback. And same thing, we haven't broke below it on the weekly momentum chart, but it is sloping down. And this was exceptionally telling when we were coming up here last month making these newer highs, but the momentum was not. So definitely negative divergence. And finally, the Russell. The Russell. This low here was from October 2014. This is the one I highlighted a little bit, was speaking about a little bit earlier. So we are down in the support zone. Price action is down in the support zone of this low here. And so, yep, we did get stopped out of TNA today on the early warning alerts. And so and that's the way that the early warning alerts work sometimes, is they seek an extremely oversold condition, and where anticipated bounce will happen, and our backtesting showed us that once they achieve that extreme condition, is somewhere between 1 to 10 days or so, there is a tradable reversal. And as you can see, and I think the weakness on the Russell, because of the overhanging issues of what's going to happen with the Russell with regarding interest rates, it succumbed more to the downside. So are we getting have we gotten a capitulation yet down to the downside? Don't know, but where's our next level of strong support to look at? Well, it's down here at the 1040 level. Now, if we go out further than that, let's take a peek out here. So there's the 1040 level here. Take a look at this in a longer term chart. That's what I wanted to do. Here's 1040, or approximately 1040. Where's the next one from that? Well, it's down here at 1100 or 1950. And you can just step it down to each one of these blanks where you saw it came up to hit resistance in the past, and then finally down here at about 868. If the from this high earlier in the year, the Russell has in fact corrected as of right this moment 18%. Now, if it drops down to the 20%, that is one of the criterias for being for that index being in a bear type market index. So with the, what about, let's go back real quick and look at, I'm going to switch over here to a longer term chart. And this is a weekly on the left and a monthly on the right. And looking across here, this level down here at 867 is very much a level that from where it bounced and went up, that was its high back in 2011. That's a strong level of support. And how far away are we from that level? We are about 17% away from that level, which would mean that would be a total about 37% correction from the highs last year on the Russell. NDX, go back and just double check the NDX on these longer term charts, because we can basically draw the same type of conclusion on each one of them. And so if the 4280 level fails, we're looking down here, then at, somewhere between the 4,000 and the 3,750. If that level fails, 3,500. If that fails, then we're looking, the strongest level supports down here at the 2,780. How far is that from where we're at? Well, it's about 12% below the low, below today's lows, down to the 3,773 level. And as you can see here, from the highs of the year, the NASDAQ is down about 8.61%. Still has a long, and as we can see, these are holding up stronger and better. But things to take a look at and just be aware. And again, go to that longer term chart to establish where the potential stronger levels of support are. Okay, the S&P is from the high of last year. Is down about almost 9%. It is also looking at stronger support down here at anywhere from 1900 down to 1850. And then from 1850, then you start blocking it down. There's 1700. Drop it down again. There's the right here at 1556. Could it correct that much? Well, yeah, of course it could, but that would be indicative of, on the S&P, that would be a 26% to get back to the highs of 2000. The support of the highs from 2007 would be about a 26% correction. Now, I hope I haven't gloomed everybody out because of those technical projections, because the really great thing about it is if it does fall, then as it starts to rebound, or even before it starts to rebound, some of these really wonderful growth stocks will start to outperform, and they will start to show their buying opportunities with the active trend trading 8-period moving average process, and we can start building a portfolio again. But right now, the only investments I'm looking at doing are some trial balloons, and also selling premiums on strategies 1 or strategy 3. So that's what's going on with that. Michael, what do you think about those projections down to the downside, huh?
Yeah, I just want to confirm. I think now it's a good time to sell premium.
Oh yeah,
I mean, we have wonderful high volatility. If you do also some stranglers or covered calls or so, or protective puts, it works.
Yep. And so one of the things I'm measuring right here, guys, to give you an idea, is this little formation here, rounded top type formation on the S&P. If it drops this level here, the 1855 level, where is it likely to fall to? And that's just basically measuring from the high to the low of that. I want to activate that and move it, and I can move that down for where it would get a breakout there. And that pattern, the pattern we see shaping up here, if it drops the 1857 level, has a targeted downside of 1600. And so, yeah, you know, Tracy, I agree with that wholeheartedly. There are some great opportunities ahead, and the thing about it is just you know, we're working a system that will keep us patient, and will also help protect our capital, so that when it is time to start moving in, we can start. We'll have the capital ready to go, and we'll be on the right side of the trade rather than trying to second guess where we think things should be. Joe, I just kind of demonstrated one of the methods of doing that projection. Was that? Did you catch that? Okay, that was on this formation up here. Basically, we've got a level of support here at 1857. I take my trend line. I can either do it one or two ways. I can just see what the high is, 2139, see what the low is, 1855, subtract the two, and then with the remainder, I take that away from 1857, what is that? 1857. And then I'll give me my new projection low, or I just do the shortcut where I take a trend line, I draw it in, and even if you're using exponential charts, it will maintain that same, or log charts, it'll maintain that same spread as I take that, I activate that trend line, move it down, and so I'm just using this for measurements right now. And it shows me that I'm going to be down at approximately, this is a real rough estimate of what I'm doing, approximately 1600 would be where my downside target if we fail here at 1855, which corresponds fairly nicely with, that past high from 2008, which is right there. You know, that's in the ballpark. There is a support zone that is in that 1576 area. Okay, well, let's close up for today and finish off with today's. I think. Just a highlight on the active trend trading system. I follow the 5 pillars of active trend trading, what to trade, defined by top quality IBD growth stocks and index ETFs. That's the reservoir of or my pool of stocks that I try to pull from. When to enter, add entry action points, when to exit, what strategy we'll be using. And primarily, we're going to be using strategy 1, which is a portfolio building and wealth building strategy, and what to expect. Here is where we finished up 2015. Our win loss ratio finished at 63.2%. Where my target for every year is 40%. We finished at 15.6. But again, it made up a double-digit return for 4 years in a row. Our average return over those 4 years was 29%, which gives us a compounded rate of about 174% over the 4 years. These results are going to be posted over the weekend. And so, yeah, we'll get into. So here's what we did on the early warning alerts, which is the other service that Mike Traeger and I developed. That is more, you're in the market for a brief time trading the index leveraged ETFs, and there were 8 specifically tradable alerts for the year, and so which corresponded to the 100% of the significant swing lows in the market for 2015. There was our compounded amount for the year, and that was the various trades that we've done for the year. And so for the active trend trading system itself, as you can say, first part of the year we went through some just iterations and started to go, but then got some consistency behind just trading off the 8-day moving average, and the last part of the year really took off nicely. And this is, you know, about a $15,000 on a $100,000 account. Future presentation each month, first Saturday of the month, except for this month because I was ill last Saturday. I do a presentation, or we have presenters also come in for the Bay Area Moneymakers, which meets in San Jose. That is a meetup group, and then we get our early warning alert update. Mike and I have done our post analysis of last year, and we've got some good adjustments that we're making going forward into 2016 for that particular membership. All the strategies that we do with Active Trend Trader are based on the Active Trend Trading System, and then we throw in about 80% to 90% of the time I invest is in this stock and index ETFs. I've allocated a small amount of time will be invested towards basic options, and then the wealth building income strategy using LEAP options. But they all find their foundation based on the Active Trend Trading System. I'll leave this up briefly. I'm not going to read through it, but folks wonder what happens when, you know, the two services that we're offered, that we do offer. Here's the Active Trend Trading part of that, and you can go back and review that if you like. Here is the early warning alert portion and what is provided. Typically with the early warning alerts, we expect to have somewhere between 2 and 8 trades per year. On average, we have about 4.5 trades per year. Our objective is to try to achieve about 10% return per trade, and then therefore that enhances the compoundability of the trades going forward. Those are our targets, and so based on that, our expectations, we would like to be doing about 20% per year as a minimum. That's based on having 2 trades, and then on average hitting about 4 trades per year. And I'll let you do the math on what the compounding on that would be. And one last final thing, I was going to basically, we were going to have an increase in membership fees starting 1st of January 2016. However, I was deathly ill, as most of you, some of you know, and so the IT guys are getting this ready to go up, and it will go up on Monday. Our increase will go up on Monday, January 11th, so there is one last weekend left to jump in and take advantage of these discounts, and then those discounts will be gone. So, folks, Happy New Year! See you next week. I'll be looking to answer some questions on individual stocks here shortly. Michael, have a great weekend. I hope everything turns out okay with the repairs you need to do in your house.
I will report.
Okay.
No, I hope so, yeah. Happy New Year to all.
Okay, Happy New Year. And so let's take a look at some stocks. So I'm signing out. Okay, that part's done. Stocks. Okay, what do you guys have for stocks? Let me get rid of some of my... Okay, here we go. Let's take a real quick look and see how that trade we did earlier today is doing. Okay, it's recovering a little bit. We got into the trade based on a bounce off of the 5-day moving average, or 8-day moving average, which is down at about 105.26 right now. The TSO had been looking, and it still looks very positive, getting some good buying action going in here. Early in the week, looked like support was holding at the 100-day moving average, and it kind of lost its way a little bit today. And that's one of the things that we want to double check with those, you know, with those intraday trades is we'll use the 8-day as a trigger to get into a trade, and we'll assign, you know, I think we got a 5% stop loss on this, or a 4% stop loss, and which just puts us down a stop loss about 101, which is still down below this swing low. And so again, went in with a quarter of a position size. We bought 30 shares. And we'll see how that turns out. Yeah, I know, Tracy. It triggered intraday, or you know, there was a 30-minute time period there where it dropped my target, and then popped back up through trading with Thinkorswim. If I was looking to be trading this right now, I'd be waiting for, I'd want another close back above the 8, and then reset. Is a 4% hard stop a trailing stop? No, Sandra, it is a hard stop. In other words, if it is it is just a hard stop of whatever the price was that we whatever the price was that was the entry price. I just set that in place, and that way it stays there, because it shouldn't go 4% against us if the trade is going to work for us, as it should. So let's take a look at it. A couple of questions here on, okay, here we go. And I'll just take the stocks as they have come in. Valero, VLO. Before I would invest, you know, I can give you a technical opinion on the stock, but I will not give you a fundamental, because I would need to run a market checkup through IBD website. To see what kind of fundamental it's got going on. Right now, it's getting a good sell-off, Jonathan, and if it closes out below but it's doing this consolidation thing between 73 and 66, and so it may just be ping-ponging around in this area. For me, right now, it's not showing me any type of pattern that I can basically base my you know, to be able to get in or get out of it. And again, I don't know if it is a quality. I don't know if it has a high enough fundamental quality. And because if it hasn't got the fundamental quality, then I wouldn't waste my time reviewing it from a growth stock perspective. I want to make sure that that's clear. Let's see, I had a couple in here. Tracy. Okay. SPRT. Well, Sandy, I'm trying to get it in there. SRPT. Again, this is Judy. This is one of those I'd want to do the stock checkup on to see if. But from a technical standpoint, it's back up here into a resistance zone, and it's either going to. And I don't like to see these real deep and fast cups like this, because they tend to fail. But it may just be doing a consolidation thing. As we'll see a lot, you know, with the market weakness, we'll see a lot of consolidation type patterns where things will start working within a range. And as the market goes on, we'll figure out, okay, is the individual stock holding up well enough and perhaps consolidating, and will be one of the first leaders going out. But I'd want to know how, you know, does it measure up fundamentally? AMBA, Great. Oh, this is looking good if you want to start getting short. Yeah, that's a really nice bearish type pattern. You get a fall back down here, it builds a flag, and then broke the flag today. And so if you want a target line on this one for a potential downside, you just take the size of your flagpole there. Yeah, that's a good looking stock to be looking to get out of. Wow, wow. I mean that flag from here to here and then the flag here and drop doesn't even, I can't even get it into the particular screen. And so that would that would be a projection to the downside. That's down here below $10. Is it going to happen tomorrow? No, but a good strong short candidate. Is that what you wanted to hear, Judy? Okay. Let's see, Valero, we did. And I've got TSO we talked about a little bit. Okay, PAYC. Real nice, compounded type topping action, complex head and shoulders, if you will, Tracy. It too is looking like, it may find some support down here at the 32 level, but for me, this is short. This is one for shorting. And plus, its fundamentals, I think, are starting to fall apart a little bit. Let's see what else I missed. TSO, WBA, TNA. Let's take a real quick at TNA. And Chris asked a wonderful question. Would I, look at TNA again? I don't know if I would want to be looking at TNA for a potential entry, Chris, or if now that we've had the initial, on the early warning alerts, had initial stop out with TNA, might want to look towards a UPRO if the S&P is still looking like it's holding up better. That's kind of where I would be, shaping things up right now. I'd want to see the but where would TNA become interesting again is probably coming back up through this level here. But what we want to take a real look at is the IWM, which is not the leveraged. And so here's the same low that we saw there on or actually it's not. As we can see, it is held up above this low back in 2014. Well, I don't think TNA has. And that's correct. Here's the low. And that's part of the issue in trading the 3-time leveraged index ETFs. The charts are similar, but they're not exactly the same. So, but that would be kind of a trigger that I'd be looking at if I was going to be trading, getting back into TNA, would be moving back above that level, or going and trading it off of the IWM. Or just say, hey, UPRO or TQQ looks better right now. And so if you were shorting, would that be identified as a short? Yes. I'm assuming, are you talking about what we did with the AMBA? Yeah. Okay, TNA. And Judy, yeah, the NASDAQ composite has a lot more strength than the than the IW moment, the Russell does right now. Because TNA, remember, it goes back to the Russell, and so compare the Russell to the Kemp, to the NASDAQ composite. Okay, 2 more, and then I've got to call it a day and get ready for tomorrow's Bay Area Moneymaker meeting. And somebody wanted NTES. See, this is actually holding up fairly well. I would be taking a look at doing a couple of things. One, I would draw this in here, Dorothy. That gives me, that was my old breakout from this pattern here. So we know that's good, strong support. And then having the patience to see, is it going to consolidate here and then move back up? Because right now it has fallen to the 50. Is it going to hold the 50 and do something constructive here that'll bring it back up the other side of this somewhere? But it may start up the other side of this over here on your chart, which is probably, looks kind of weird, but it would be probably out in the latter part of February timeframe. And so, okay, folks, one last one, HA. Yeah, Chris, I've been watching Hawaiian Air also. A similar type picture. I had a nice breakup. It achieved its upside profit target, and on a daily chart, it has dropped back below this, so it's looking more weak. But on a weekly chart, it is still holding this 20-week moving average, which approximates the 100, and there's the 40-week there. And so it's still in a nice little uptrend. It's just where's it going to find support? And so thank you very much, guys. I am feeling better, a lot better, and thanks for considering. Have a great weekend. If I see you at the Bay Area Moneymakers this weekend, great. And if not, trade well, trade wisely. God bless everybody.